Good morning, good afternoon, and good evening to everybody. And thank you all for giving us some of your time to join us for this event. Welcome to the third event in our series this year. My name is Sandy Srinivasan, and I'm privileged to represent the alumni in the US as the PanID USA president as of Jan 2020. So a quick word about the PanID USA. We're a 50,000 plus member strong organization, and we primarily exist, while it's for a variety of reasons, for two main things. One is, of course, the branding of the IITs, and the other is to provide alumni services. One such example being this event. Besides these kind of webinars, we have a bunch of social events and also our signature chai and chit chat events. There's also a large virtual summit planned for December 4th and 5th. So all of these fill up quickly, so register fast. I'll just share two websites with you. One is www.iit.org to register for general events, and the other is www.iit2020.org. We're also partnered with the Wheels organization for this event today. I want to take this opportunity to thank you to many of you who answered my call at previous events to volunteer, to register, and be part of this exciting PanID organization. Just to share some results with you, thanks to all of you, our membership has increased 40% in the last 7 months. So I salute and thank all of you. There are also fantastic sponsorship opportunities, as you know, that are available for those among you that would like to get your company name out in a big way to a very wide audience. Our terrific sponsorship opportunities are also available for our big virtual summit, December 4th and 5th. On that note of sponsorships, a very, very big thank you to our gold sponsor, Celtis. I thought this was very cool. Celtis actually is a fantastic CRM company that plans to take on Salesforce by storm. But what was very interesting was that Malla Mekala, their CEO, he said, you know what, I'd like to dedicate my sponsorship to MS Dhoni, the India cricket captain, for his wonderful contribution to Indian cricket over the years. So I thought that was very cool of Malla, and just for that, definitely go ahead, check him out, and help out Celtis if you can. A big thank you also to our silver sponsors, Allen AI and Vanguard. So my dear friends, Ramu Sankara and Roy Cooper, thank you so much. You know, as the president, I get the privilege of starting these events, but you know, credit must go where credit is due. The real credit goes to Ron Gupta and the wonderful team of volunteers that put this together. Quick introduction, Ron is a fellow member on the board, president of IIT KGP Foundation, and he's founded the Ron and Chitra Gupta School of Infrastructure at IIT Kharagpur. So Ron, my good friend, take it away.
Thank you. Thank you, Sandy. You know, when I woke up this morning, I read a groundbreaking news in the banking industry. As you know, the first bank was set up in 1784 by Alexander Hamilton, called as the Bank of New York, which is now BNY Mellon. But today, the groundbreaking news was that the first time a woman has been appointed as the CEO of a big Wall Street bank. Jane Fraser was named CEO of the Citibank to take over from Mike Corbat. That is a wonderful, wonderful breakthrough news in the banking industry. Good morning. Good morning on the West Coast, and then good afternoon, rest of the US, and good evening to our friends in India and elsewhere in the world. Welcome to this conference. As a part of our objective to provide discussion on various topics of interest to IITians, the PanID USA is conducting a series of virtual conferences, this being the third one. Now, primarily as a result of the new coronavirus, various parts of our day-to-day lives, our educational systems, our workplaces, our economy, they're all going through a significant transformation. So far, we have successfully delivered a conference on education in June, one on economy in July, and today we're talking about Fintech, use of technology in financial services. Today we have two super experts and one super reporter in the world of Fintech. They're going to discuss today and engage us further in the new paradigm in Fintech. What is the new geopolitical scenario? What's the role of artificial intelligence and machine learning? Terms like cryptos, blockchain, which many of us as ordinary people don't know, like to know about them. Global liquidity. And finally, the new opportunities this presents to the IITians and the IITs. Our first speaker today is Vinay Nair, an IIT Madras gold medalist, a serial entrepreneur. The second speaker is Ashish Chauhan, an IIT Bombay alumnus, and also the managing director and CEO of the Bombay Stock Exchange, the world's largest and the fastest exchange. And to facilitate the discussion, we have with us Devin Banerjee. Devin Banerjee, a senior fintech reporter with LinkedIn, and also important to us IITians, he is the son of my alma mater, IIT Kharagpur alumnus, Debashish Banerjee. Now to get started, a few ground rules, just a few basic ground rules. The conference is being recorded, so there is absolutely no need for you to take those copious notes we used to take in IIT. A recording will be sent to all participants soon after the conference. Second, a disclaimer that all opinions expressed belong very dearly to the speakers, to all of us, the speakers, and not necessarily express the opinions of Pan IIT Alumni, USA, or Wheels or its other associates. Please provide any feedback on the conference through our website, www.iit.org. Now, to get the conference started, let me introduce Srinath, a fellow board member of Pan IIT and a graduate of IIT Madras, who will introduce the first speaker, Vinay Nair, also a graduate of IIT Madras. Srinath, take it from here.
Thank you, Ron, and good morning, good afternoon, good evening, everybody. It is my pleasure and honor to introduce Dr. Vinay Nair, who not only is an IIT Madras fellow alum, but also my batchmate. So just to give a quick overview of Vinay's background, Dr. Vinay Nair is the founder and chairman of the Tifin Group. A serial entrepreneur, investor, academic, Vinay has served as an advisor or board member in several companies in financial services. He has always sought to challenge the status quo in investing. As a finance faculty member at Wharton, with experiences teaching at MIT and Columbia, he focuses on venture capital, private equity, and entrepreneurship. He is passionate about the power the financial markets have to affect change in the world, and in 2008, co-authored Investing for Change. His academic background includes a master's from Stern School of Business at NYU, with an award for the best thesis, and a bachelor's from IIT Madras with a gold medal. So without further ado, I present to you Vinay Nair.
Thank you, Srinath. Greetings, everyone. It's a pleasure and an honor to be here, get a chance to speak to this community, which is near and dear to all of us. When Srinath first called me and asked me to speak on fintech, it got me thinking about what the term even meant to a community that probably is outside the world of fintech. And technological disruption in finance is not new. It's been going on for a long time, from the first telegraph line that was laid to expedite communication, to the 50s, where we had credit cards and ATMs, teller machines, to, of course, several improvements in latency, speed, communication, and hardware. So what's interesting, though, is post-crisis, the tech disruption in finance, the nature of it has changed. To give you a sense of how dramatic this change is, it's interesting to note that there are more than 7,000 firms that have started in the last 10 years in the fintech space. Now, the space covers a lot of different types of financial services. Think of it as banking, alternative lending, insurance, real estate, payments, wealth, asset management. All of this broadly falls under this umbrella, a big umbrella of fintech. In addition, there's this world of what's called embedded fintech within non-financial services. Increasingly, even big tech companies are entering payment space. So it's not surprising then that the scale and scope is significant. What's interesting is it's global, it's widespread, and it has taken off in a way that is noteworthy. Venture capital funding into fintech today in the US is about 20 billion, which is about 20-25% of total VC investments. Now that number, just a few years ago in 2014, was 4 billion, so about 1/5. And in 2001, that number was 300 million. Quite a significant factor below the 20 billion we have today. And that doesn't include the corporate investments that are going on from the incumbent players. In the US, when you add all those numbers, it's about 60 billion in fintech investments that are going on. So when you take the number of firms that have started, the amount of capital that is going in, and how globally widespread this phenomenon is, it is clear that there is something structural going on in the space, maybe similar to what happened in the late 19th century or in the 50s, when there were significant shifts in how technology changed financial services. Now, we are still early in this trend. To put that in context, there are about 50 unicorns, private companies with market caps of more than $1 billion. There's about 50 of them that add up to about 300 billion in market cap collectively. Put that in context of the existing financial service companies, there's about $4 trillion in market cap. So there's plenty of disruption room in the space. What's interesting is also that you've already seen some of the disruption. You've seen how PayPal is much bigger than American Express today, which 20 years ago, PayPal was a startup. Today, the market cap of PayPal is bigger than the market cap of Amex. So payments is where this started. It moved to lending, wealth, investments, insurance, real estate, and we are still in the early phase of what the disruption could mean to several firms. So it's not surprising that the world's biggest bank and the world's biggest asset manager are really concerned and trying to introduce technology-based revenues in their own businesses. What's happened with, for example, Netflix versus Blockbuster, or Amazon versus Barnes & Noble, or Apple versus Kodak, I expect some of this significant changes to happen in financial services as well. So there are several factors driving this today, one of which clearly is the change in trust. So post-crisis, since 2008, in all the surveys on trust, the industry that ranks the highest happens to be technology, and the industry that ranks the lowest happens to be financial services. So it's not surprising that financial services is trying to adopt technology to provide a more credible experience to the user. When you combine the demand from the user with some of the technology, and I would just point out to a trifecta of three things, which is APIs, which really allows you to create point solutions and link up to different specialized solutions. The cloud, you can really launch things up in ways that couldn't be done. And of course, the advent of AI, machine learning, which allows you to come up with predictive algos. And add to that the data behind. Over 90% of all the data that we have, that humankind has, was created in the last 2 years. And each minute, there's 2.5 quintillion bytes of data that's being generated. And that's only going to increase with the sensors and the IoT movement. And the ability to extract intelligence from this data with the algos that exist today and the computing power that exists today is quite mind-boggling and novel. We didn't have this even 10 years ago. So put these technology factors together, the structural issues in the industry with trust and margins, it happens to be the highest margin industry across all industries, financial services. So there is plenty of fat to chop at in terms of disruption and innovation. All these factors are really coming together in a way that is quite significant for this industry. And as a community, I think IITians are quite uniquely suited to participate, contribute, benefit from this trend. And of course, many of us eventually ended up in financial services. If I anecdotally look at my own batch, about 25–30% would be my guess. And of course, we know tech. So along with that, if you think about the geographic areas we are in, US and India, India happens to be the second highest fintech adoption in the world, with more than 90% of the consumers having interacted with at least 2 fintech apps in the last 6 months on a regular basis. That number in the US, by the way, is 45%. So when you look at the geographic span and the DNA and the experience, I think that this community can contribute a lot to what's going on in terms of the shift. I'll be happy to answer questions on that, but let me thank the group here again for giving me a chance to speak, share my thoughts, and hand it over to Ashish. Thank you.
Okay, thank you. Thank you, Vinay. Yeah, I'll be Ashish for a second. Thank you. That's superb. Your use of PayPal has generated online questions already, and I'll mention one of them. You don't have to answer now. Just wait for the Q&A. But there is a Piyush Agarwal who is asking, so if PayPal is bigger than Amex, what are the other companies lining up behind PayPal to be as large as PayPal? Anyway, at this time, Vinay, great, thank you, good job. Let me introduce Suresh Shenoy. Suresh is the president of Wheels Global and a founding member of Penn IIT. He's an alumnus of IIT Bombay, who will introduce his fellow alumnus, Ashish Chauhan from Bombay Stock Exchange. Suresh?
Thank you, Ron. Greatly appreciate it. It is my distinct honor and pleasure to introduce a fellow alumnus from IIT Bombay, Shri Ashish Kumar Chauhan. He is the Managing Director and CEO of the Bombay Stock Exchange, India's oldest exchange, the world's fastest exchange with 6 microseconds response time, and the world's largest exchange with 5,000 plus listed companies. Prior to joining the Bombay Stock Exchange from 2000 to 2009, Ashish worked at Reliance Industries, India's largest conglomerate, as president and group CIO. He was a head of corporate communications, and get this, he was also the CEO of the cricket team Mumbai Indians in its formative years. He has also been awarded Digital Icon of the Year by Indian Express Group and ranked amongst the top CEOs in financial markets by Asian Banker and among the top 50 CIOs in the world by Information Week US. He has also co-authored a book on the history of the Bombay Stock Exchange titled The Temple of Wealth Creation. Welcome, Ashish. Over to you.
Thank you, Suresh. It's a pleasure and honor to be in front of all of you sitting in Mumbai. I spoke at Pan IIT conference, I think 3-4 years back at San Francisco, and since then I have not been in touch. But when Suresh called up, I had to agree. So thank you for this opportunity, and look forward to see you all in conferences in December, as Ron said. Vinay, I think, covered broadly what is finance and where all it is used. And so for me, I want to touch upon what is finance. But just to summarize, anything to do with money has to do with finance, right? So anything which touches money and every transaction, other than the social transactions, every transaction has one leg as a part of money, right? So you buy something, sell something, you need to end up putting money somewhere. And so effectively the finance in a way is all pervasive. And technology has been used in finance from time immemorial. In fact, the money itself is a technology. And each time a newer technology is what you search for. And something which is not replicable easily, which is easy to carry, and a lot of, I mean, it's not easy to spoil and stuff like that. And so money has many, many characteristics. So I won't touch upon that today. But why do we use so much technology in finance from literally millions of years? Because that's where the money is, right? All of us work for money. And in this business, literally the inventory is money, right? So if you can get slightly better advantage vis-a-vis others, you would want to sort of use better technology, faster technology, newer technology, and sort of more functionalities and so on and so forth. So that's where the fintech has been there. I think Vinay talked about Telegram, but before that, when there were no telegrams, the ship captains, when they were coming closer to the London port, 3 days or 4 days in advance, they will send a pigeon, homing pigeons to London, telling their friends that my ship is coming, start buying my shares. And that is now being called insider trading. In fact, Reuters, if you heard of Reuters Newswire, which is now called Refinitiv, came out of that business, just sending pigeons. Sending pigeon was a technology those days. Why I'm telling you this is people will go to great extent to get that small little advantage in information, in ability to predict and doing newer things, better things, faster things, and so on and so forth. And now we are in what I call nanotech or nano, sort of nanoseconds regime as of now. And so we use technology in finance in every aspect of it, whether it's banks, mutual funds, insurance, investment banking, stock markets, trading, clearing, settlement, microfinance, payment processing, hedge funds, accounts. Every company will have accounts, right? Every human has accounts in some ways, right? Lending, borrowing, collaterals, every part of life, you have finance and technology getting it more integrated, faster, better, more controls, and so on and so forth. And somehow, by quirk of fate, because this is a little more conceptual, it doesn't require physical work, physical bridges and other stuff, except of course, electricity in some ways, but that is also not that physical. India became literally at the forefront of the fintech revolution over last 25, 30 years. I'll tell you a story of that, but just to give you a broad perspective, which are the areas in which the finance or fintech we use pretty much everywhere, but one is what we call transaction processing. Every transaction, you need to basically give money and take something. And that's where the transaction processing comes. Then information processing. So once you have information of various types of a particular shaving blade or say shaving foam or milk bottles, all of them will have some money associated, right, in a shop. and all that information needs to be sort of accessed, where it is coming from, where it is going. Everything has to do with finance. Compliance, or RegTech as we call it, regulatory technology, where all the compliances, especially post great financial crisis, there are more regulations coming up across the world about people using other people's money, people making money, and so forth, so on and so forth. So that compliance, or RegTech, has become important. And the most important part in life is what I call predictability, or ability to predict. Almost the entire human endeavor is about predicting future. Whether you can predict for 1 year, 10 years, 1 second, 1 nanoseconds, you can still be a winner. If you can predict better than others, even a very, very small fraction of time. And that's what, for me, makes it that much more interesting, that literally whatever your interest is in as an engineer, you can be in fintech, and you can call it fintech in some ways. And India, in beginning, around early 90s, when India, many of us moved out of India. I mean, I stayed back, but many of you moved out. Around early 90s, India used to produce probably 500,000 computer science engineers every year. But a new project of railway automation started. Of course, it has a small finance component because you have to pay for that. But in 1992-93, after Rakshit Mehta scam, India set up automated exchanges, screen-based automated trading. US was not screen. New York Stock Exchange was floor. CME, CBOT, CBOE, all were floor. NASDAQ was screen, but only for seeing the quotes. For trading, the dealers used to call each other. There was no major exchange in the world which was automated on a screen-based algorithm matching. Some tiny exchanges were coming up, but nothing great was there. And India's first automated exchange, screen-based exchange, was set up called NSE, and it became a roaring success in a very short time. And then, of course, BSE also became automated within few years, within few months. So 1994, November 3, NSE became automated in equities, and 95 June, BSE went automated screen-based. And that's how it ended up basically becoming the largest automated market in the world. After India became automated, the rest of the world, Japan, US, Europe, everyone became automated. So India, in a way, took a leadership, and we used some technologies which were unheard of, like satellite communications for two-way processing in retail transactions. Because India, it used to take 5 years to get even a normal analog phone, right? And to get a link would take you 30 minutes sometimes. Whereas we wanted to give a completely sort of online, real-time kind of transaction processing framework. And that's where India took a leadership on fintech by a completely different means. But it became an kind of an example for other industries to follow. So as soon as the exchanges became automated, the ATM started coming up across the country using the SATCOM, because the lease lines were not available. And so using the satellites, they started coming. Later on, when mobiles came, we replaced the satellite terminals with mobiles and so on and so forth. And so 95 is when all this kind of took off. And then Y2K came. But by the time, India had tremendous confidence, whether it was Wipro, TCS, Infosys, Patni, anyone, that we can do very large, very complex projects. And that's where India kind of, this was the automation of stock market was a harbinger, an early indication of India's technological prowess 25 years later. In the process, many banks started developing their own softwares for banking automation. And so one of them was Citibank. They set up a small subsidiary called COSL. And that later on became very large, got listed on BSE, and it was taken over later on by Oracle, which is one of the larger providers of automation of banking across the world. And similarly, Infosys created its own banking automation platform, and TCS. These are the three probably out of top 5 or top 6 banking end-to-end system vendors. These are the 3 top vendors coming out of India and providing services to literally thousands of banks worldwide. So you had like stock market captured, the banking pretty much end-to-end captured, but we still had issues relating to the overall consumer, sort of a normal person trying to buy things. We were still doing manual activities, and that's where the recent situations using Aadhaar, Aadhaar was in a way, Nandan Nilekani, one of the IITians, was responsible for setting it up. But when Mr. Modi took over, he kind of gave a new shape by creating a Jandan Aadhaar Mobile Trinity. Each person was given a new bank account if he did not have, linked to his mobile number, and mobile had become ubiquitous by then, around 2014. And it was linked to the Aadhaar. So Jandan account, Jandan bank account, Aadhaar number, which is unique identity with the sort of information, biological information, and the mobile connectivity. Put together, it has become a potent combination. Within first year itself, they opened Yep. So they ended up opening 300 million accounts, and that's where today India is probably close to 700 to 800 million accounts, and all of them are linked to Jandan Aadhaar mobile kind of activity. So you can literally send. Then they created a new framework called UPI, Unified Payment Interface, through which today, from any mobile to any mobile, any bank account of any person to any bank account of any other person in any other bank, you can send the money at pretty much zero cost. Today in India, nowhere in the world this happens. It's not connected to a particular application like WeChat in China. This is like multiple providers, multiple banks are providing this same facility, but it's like interoperable. And that was a unique Indian kind of a framework. India also set up depositories for keeping stocks like banks without actually having physical stocks. And many such innovations. Today, I mean, the UPI transactions last month reached 1.5 billion transactions in a month, right? So that is the kind of sort of acceptability that is there. India also does T+2 settlement in stock markets. It's fastest in the world. But today, BSE can do settlements on T+ few seconds, not T+2 days, but T+2 seconds. BSE's scale is around 500,000 orders in a second using Linux boxes. And we give you response time of around 6 microseconds, which is 150,000 of a second. And it's a lot of algorithms, a lot of HFT, high frequency trading. So wherever you want to trade, India does, whatever you want to do with finance, money, India is like at the forefront, but it doesn't make as much money as you would do it in America. So one way to do is use the Indian skills to sort of make money in US by giving those frameworks, I mean those technologies. Last few points. Today, if you read SBI chairman's views, he said his SBI has created, State Bank of India, which none of us thought will be automated ever, has created a mobile app called Yono, and he thinks his mobile app is worth $40 billion. Okay, that's how it has come. The other unique innovation of India is what we call OTP, one-time password. So each time you use your anything, if you use your bank account or you use your credit card or debit card, and you want to pay something without being physically present, you get a one-time password on your mobile as a text message. If you put it in, then only the transaction goes through. That reduces the number of fraudulent cases tremendously. That reminds me of the frauds. Usually Russians, North Koreans, Chinese, Iranians are considered pretty smart at frauds on financial or fintech. Indians are catching up in many ways within India. There are many incidents which are coming up on frauds, which is also a type of fintech, but on a nefarious side. And there is it has become so popular that there is a web series called Jamtara. Jamtara seems to be a small village in Orissa. And if you want to see, probably it's on Amazon Prime or it is on Netflix. I think it's Amazon Prime. Check it out. I hope I gave you a perspective on where India is. India is pretty much at the top of the line, at the lowest cost. It's a very frugal country, but it's in terms of adoption, in terms of innovation, in terms of using finance and fintech for making lives of normal people, the poorest of poor, easy, is where India has been able to do amazing stuff. And many countries across the world are actually waiting to adapt. In fact, Chinese guys tell me that they don't have Jan Dhan Aadhaar mobile kind of framework like we have. Last year in September 2019, I spoke at UN on India's achievement at UN week in New York. When Mr. Modi also came, I also spoke at UN on India's achievements in fintech. So that brings me to the end of my initial talk, and we can take the questions. Thank you.
Thank you. Thank you, Ashish. That was superb. That shows how far India has come. And last month, actually in July, we had a session on economy, and we had Arundhati Bhattacharya of State Bank talk about the automation at State Bank, which you also referred to. Thank you for your presentation. There are a couple of questions that have come in live, which we'll talk about in Q&A, but I'll just give you a hint at what those questions are. One is from a gentleman, Krishon Majumdar, and his question is, how can the rural farmers benefit from fintech? And second one is from a gentleman, Nandu Nair, and his question is, did demonetization, which happened in India a few years ago, was the demonetization responsible for some of the growth in fintech? But anyway, think about them, and then Devin will bring you the questions at that time. At this time, let me introduce to you to Debashish Banerjee. Debashish is an IIT Kharagpur graduate, my alma mater, and he's also himself a financial services regulatory compliance professional. But more importantly today, he's here to present his son, proudly his son, Devin Banerjee, to do the moderating between the speakers today. Debu?
Thank you, Ron. One of the items Ron forgot to mention is Ron is also my hallmate, you know. So a good shout out to those of you listening that were from Nehru Hall. So, you know, welcome to the element. I cannot express the joy and pleasure to introduce my son, Devin Banerjee, today. Devin is the financial services editor at LinkedIn, where he runs a team that oversees financial content and editorial strategy for what has undoubtedly the largest professional networking platform. LinkedIn today, or as of August, had 706 million members in more than 200 countries, and Devin oversees pretty much the entire team related to financial services. Before LinkedIn, Devin was for 6 or 7 years, he was at Bloomberg, responsible for covering the private equity industry, corporate M&A, capital markets, and shareholders. He's been featured on Bloomberg TV, and for a brief second had 2 seconds of fame on 60 Minutes. And he has also been the moderator of some of the larger financial conferences overseas, including Germany and the US. He was a recipient of the Daniel Pearl Journalism Award, and he worked for the Journal, Wall Street Journal in New Delhi, and for the Washington Post in South Korea. He's an honors graduate of Stanford University School of Engineering, and he was the editor of the Stanford Daily News. So having said that, Devin, take it away. I'm so proud of you.
Thank you, everybody, for joining. Thank you for having me. I'm very excited to engage Ashish and Vinay in conversation. Please continue to add your questions to the Q&A tab, and I'll be sure to pose some of those in the remaining time that we have. Let me just begin with 2 items of context. The first coming from LinkedIn. We have this vantage point, as was just mentioned, 706 million members globally, about 50 million of whom we identify in financial services. And my team pulled some data over the past 5 years. We've seen profiles on LinkedIn adding fintech skills grow at a rate of about 1,100% over the past 5 years. That's a 12-fold increase. We've seen searches for fintech topics across the LinkedIn platform grow about 17-fold over that time period. And we've seen content creation around fintech topics grow about 9-fold over that period. The takeaway here is that both the expertise and the interest in the fintech ecosystem is undoubtedly growing at a very rapid clip. Second point of context I'd like to include quickly, as Ron mentioned at the top, the news around Citigroup this morning, Michael Corbat transitioning out of that CEO role. I interviewed him about 18 months ago, and I just want to point out the fintech elements, how strong they were in that interview, and candidly in all of the interviews he does. He says the usage of mobile banking apps, according to Citi's research, has been rising at about 50% per annum over the past few years. He says 91% of millennials here in the United States believe that their mobile app is better than going into a bank branch. And he says a bank like Citigroup, which is one of the largest global banks, is really a technology company first. It's a digital first, mobile first company. The skills and the talent they're looking for are all core technology skills. So with that context, let me jump into a few questions. The first is, all of us are dealing with this COVID period and the changes, as have been mentioned, in different ways. Vinay, I'd like to start with you as an investor. You have an interesting vantage point as well, looking across the ecosystem, diligencing deals and potential investments. How have you seen this COVID period affect the fintech ecosystem, either accelerate some of the trends that were happening, for example, or perhaps challenging other parts of the ecosystem right now?
Sure, Tifin. You may have heard of the saying that during times of change, change accelerates. And in some ways, the pandemic has created an acceleration of digital adoption in financial services. Among the players who had already jumped on this bandwagon, some of the larger financial incumbents, they just accelerated it. And the ones who did not or who were reluctant are now doing that. In fact, there's a joke in terms of a multiple choice option. Who was the executive in charge of your digital transformation? Your CEO, your CFO, your CXO, your COVID. And the answer is COVID. The COVID really has created some of that adoption. Now, having said that, the early phase of this was very challenging, especially as an investor. What you saw was everyone essentially holding on tight to their firepower. They wanted every firm, especially early stage startup firms, to have 18 months of runway, since no one really knew how things are going to emerge. And they still don't, although there's a semblance of normalcy emerging. And that meant that as investors, you had to take a call on which firms you will back, which firms you'll cut. And the data that's coming in, especially the last quarter, the last few months, continues to show that funding for seed and Series A stage startups has dramatically dropped, while funding for late stage startups has recovered and actually gone up. So I would say that the current crisis, while it's creating adoption, will actually create a bit of a wedge for early stage companies.
Ashish, we're receiving several BSE specific questions, so I want to pose these to you, but perhaps first you can start with how BSE was affected by the lockdowns, or how resilient it was, and how much of that is owed to the technology infrastructure that you have built at BSE.
In a way, on 23rd March, the Prime Minister came on TV and announced a lockdown, which lasted 70 days in the first phase. And then pretty much India is locked down even now, but in parts. And so when it was announced, as soon as the address got over, next moment on Twitter, I wrote that BSE will work as normal tomorrow. And there was a total chaos. All television channels were trying to catch me, and I was not going to go on the television because people were worried about their lives. All my brokers, we have presence in pretty much every city, every town, we have around 200 to 300,000 terminals, a million people working on our terminals and for clearing settlement, and of course, many millions more on mobile phones and stuff. And they were all worried saying, how will you do the settlements? You can of course do trading, but how will you move the money when people are not giving money? What will happen? Stocks, the collaterals and stuff. But the fact is, I had signals from the government that they want us to continue as normal to provide liquidity to the markets so that they don't go down in value precipitously. And they had made stockbroking into essential service 1 week before that without telling anyone. And so we knew that there is a possibility of longish things sort of being blocked in variety of places. And that information going to every policeman is a nightmare. So a lot of our brokers and their employees got beaten up in different villages and towns, and we had to integrate with those people, but there were physical parts of it. The logical parts, the next day morning, BSE and other exchanges started, and they remain started till now. There has not been a single second of stoppage. And the number of people trading on our markets have actually gone up. Last quarter, we added 3.5 million new customers on BSE, which is pretty large on a scale of 54 million. And so effectively, it has been a smooth sailing, barring the fact that people got beaten up and we had to do a lot of coordination. But settlements happen on time. Trading, clearing, settlement, new products development, new products launches, everything went really, really fine. Initially, the markets went down 40%. Sensex, which was at 42,000, went down to almost 25,000. And then now it has come back to the earlier level, almost reaching there.
Right.
And so people have slowly discounted that information, but Indian stock markets worked unbelievably well beyond our wildest imagination. And today, I don't have even 10% people coming to the office, the BSE staff. The rest 90% work from their home. But over last 10, 15 years, we have built the business continuity planning. We have disaster recovery centers. And it's like a complete package which has helped us do this. And that is true with all our members also.
Yeah, we've certainly seen a lot of resiliency among financial services institutions and being able to transition to virtual and remote work. I would certainly say that's been a nice takeaway of the past 5 to 6 months. I want to spend a couple minutes on a topic that we're receiving a lot of interest and questions in, which is blockchain technology and applications of it, like cryptocurrency. Ashish, going back to you, just talk a little bit about to what extent, if BSE has, allowed for crypto trading or an integration of cryptocurrency activity so far.
In a way, just before that, Indian stock markets work, Indian banks work, but India made the rest of the world's bank also work. So that was also very interesting. India was in lockdown, but almost all the world's banks back offices and their IT centers are in India. For example, Bank of New York has probably 25, 30,000 people in Pune, or Deutsche Bank has probably 25,000 people in Jaipur. And all of that worked really beautifully. And that, I think, is a take home for me, that India was really resilient for the rest of the world also. Having said that, coming to crypto, for us, at least as a person who is also teaching finance and has worked in finance as much as I worked in technology, crypto is basically an individual created money or currency. And currency, the modern currency, is basically what we call fiat currency. Fiat is not the car, Premier Padmini in India, or the Italian car manufacturer, but it's fiat of the government. That is the power of the government. And the modern states, modern nation states, one of the biggest pillars is their ability to issue the currency and then make it look like a currency. It's illusory, but still all of us take it as currency. While as the other currencies, which are cryptos or whatever name you give, I can create billions of or infinite number of different currencies, and I can issue infinite numbers of the notes or whatever we call it, the quantas. And so literally there will be infinite number of, infinite multiplied by infinite number of cryptos moving around at some point in time. it's so easy to create cryptos is not funny, but each state government takes it as a basically sabotage. Till the time it's a small little thing, nobody cares. When it becomes large, the state, it is basically a revolt against the modern nation states in many ways. It's what I call smugglers' money or drug dealers' money or people who want to sabotage the modern societies. And if they're successful, clearly you will have anarchy, not only in monetary terms, but also in social terms. So broadly speaking, my understanding is this is going to be a very different world for cryptocurrencies. Like people were saying that China was going to issue their own cryptocurrency. Yesterday, it was very clear when the news started coming up, it's not going to be cryptocurrency because if anyone is able to hack crypto, which is easy to do, or at least will become easy to do in 5 years, then he will be able to create infinite currency without creating currency and so on and so forth. So effectively, China is going to issue their digital currency in a digital format, but then our modern currency is also in digital format. So there is nothing great that is going to happen except that this cryptocurrencies are actually sabotaging the modern financial system. Having said that, the other part of the technology that is the distributed ledger part of it, again, most of it, what it projects to do, that it will be able to create a cure for cancer, but then it has not been able to create cure for COVID. So that is how I see that people who have made money in cryptos are now putting little money, marketing themselves on various platforms to show that if crypto is bad, at least my distributed ledger is good, and so on and so forth. But for me, both have very limited usage, and hopefully the modern nation states will wake up and before it is too late for them.
Vinay, do you share that view? Is it hype, or do you see any positive promise in the underlying blockchain technology or cryptocurrency specifically?
Like most things, a bit of both. I think that the reality is, as Ashish pointed out, it is very challenging for a technology to get widely adopted when most of the governments of the world are against it, and when most of the users are involved in illegal activities. So, having said that, the technology by itself is not a cure. I think it has to solve something that is needed. And where the blockchain technology, not the currency, but the core underlying technology, is particularly helpful is to reduce times and especially cross-border transactions. So you take SWIFT, which still exists from decades back as a technology for transfer, could get disrupted. So just like how various technologies allowed faster processing and verified faster processing, blockchain technology can play a role where it takes 2 days or 3 days or 4 days to settle and transfer and receive. Those sorts of things, I expect that to get disrupted through some of the blockchain aspects.
So I can see we have more questions on crypto coming in, but we do need to move on just for the sake of time. The next large topic area I'm seeing interest around is regulation. Regulation of the fintech ecosystem and developments in that ecosystem. Let's perhaps get the India's point of view from Ashish. How have do you see regulation as a pain point and a source of a source of roadblocks, or a force for progress when it comes to technological innovation in finance in India?
If you look at basically, I have been a regulator pretty much large part of my career. I have been part of many regulations, creating many laws and things like that. And so my perspective may be very different from what you get from the market participants. For me, what we do in finance is basically create and maintain trust. If you don't have trust in dollar or in rupee or in pound or in euro, then there is nothing there, right? So to maintain that trust, many people say law and order. I call it order and law. That you have to maintain the order first and then you create law for that. So basically the changes are coming so rapidly, so fast, And it's very difficult to sort of differentiate between good and bad. And sometimes too much of good can become too much bad and stuff like that, right? What happened in the global financial crisis. And so effectively, the regulator's job is to keep on ensuring that you create kind of lanes in which people have to sort of keep on driving their cars. In normal free market, you should be able to drive your car in any part of the road, right? But all of us know that in US, you have to drive on the right, in India, you have to drive on the left. And that we accept as a part of the free market. We don't question that, right? So that's where to maintain the flow, sometimes traffic police actually start guiding. And when there is too much traffic, they have to actually do that. And that's where, for me, the regulator's job is very, very tough to figure out, allow good things to happen without breaking the trust of the society, the actual normal physical activities of the society cannot get broken down by the activities which we do in etherland, you know. And that's where the regulators, many times we think they are putting hurdles in our pace of creating my own competition to US dollars. I can create that. Why government is not allowing me? But government is US dollar, boss, right? And so that is where many of us who are very, very self-centered have that perspective, and we should be self-centered. But effectively, if we don't have the society around us, then you may be the only person in the world and there is nothing around you, right? So that's where the regulator's job becomes tough. But newer and newer regulations, faster and faster regulations will happen to maintain that law, order, and primarily the trust, because trust is very ephemeral. It's very difficult to build, but very easy to give up. And that's where I keep on worrying day and night on, if things go wrong at one place, will it affect people's mind about, or mindset about other things, and so on and so forth. That is pretty much the philosophical perspective on that.
Yeah, that's a fantastic point about how fragile trust can be. Vinay, how would you grade regulators in the US when it comes to fintech development right now?
So regulation, you know, I just stay away from grading regulators, but I think overall regulation, so US has been different from India in the sense that most of the fintech activity has been B2B as opposed to B2C, you know, less direct to consumer. And as a result, the regulatory pressures are also lower. I have no doubt that, you know, if what has happened in India would have happened in the US, regulation would be much tighter and the need to regulate would be much tighter. So in some ways, the need for regulation shows up if you're selling prescription drugs, not if you're selling vitamins. And if you're selling it to patients, not to doctors. And what's happening in the US is a lot of fintech solutions is enterprises and knowledgeable investors, and often peripheral. In some areas, you know, banking being one, investment management being another one, you get into the realm of drugs, not vitamins. Payments is vitamins. And the boom in payments that has happened is completely unregulated, because to a large extent, it is not, if you get it wrong, it's not particularly detrimental. It's not irreversible. So US is still catching up. Some of the regulation is getting retrofitted to the technological advances. And especially in the world of insurance and banking and wealth management, there have been some, I would say, proactive changes to let the innovation continue rather than stymie it.
Great point. We have time for, I would say, about 2 more questions. Ashish, you mentioned this in your remarks, you know, the promise that fintech holds for the most disadvantaged, you know, segments of society, especially in India, and the promise for the rural population, for the farmer class, et cetera. Perhaps, you know, very briefly, you can touch on just what you're most excited about, what kind of progress fintech holds that you're most excited about for that disadvantaged, massive population in your country.
It was said, you know, in 1985 by Rajiv Gandhi in one of his speeches. He said, if India is spending 100 rupees for the poor, only 15 rupees reached them. That was in 1985. By the time it came to 2014, that 100 rupees from 15 rupees, it became 1 rupee. The 99 got siphoned out by the intermediaries. When this Jan Dhan Aadhaar mobile trinity was created, the poorest person in India usually has a mobile. And he has a bank account, which is having no charge. And he has an identity number called Aadhaar number. Using that today, government is putting 500 rupees a month during COVID times as a special relief to almost 800 million people's accounts. 800 million people are getting that 500 rupees. Of course, they are also getting the free food, that is free grains and all, using the same Aadhaar number. But just the money part, in one stroke of a button, it is going to 800 million people. 800 million people is, if you add up Europe and US population put together, that is the population which is getting in 1 second that 500 rupees, right? And so without any leakages, without any person taking away, and from that moment, that person is able to use that money to buy toiletries or anything that guy wants to use that money for. And that has basically, I think somebody said before this meeting started that they went out to India on their 50th sort of year of passing out from IIT. They were going through various places in a village. They went to the tea stall and they didn't have the change. And that guy said, Paytm se paisa de do. That is, pay me through Paytm, which is basically a one payment app, right? And that is all pervasive. The tea vendor in India is like the lowest of low businessman, right? And he is using that. For me, that is where India has come. And the cost, if you go to Kenya, mobile to mobile payment, around 10 years back used to cost 10%. So if you moved money, 100 rupees or $100 from my account to your mobile account, only 90 will reach. 10 will be kept by the telecom company. In India, if you send me 100 rupees, you will get 100 rupees plus some voucher to spend because Google, WhatsApp, Walmart, Paytm is backed by Alibaba. They are all spending money to get people on their platform. So if even otherwise, the marginal cost is close to zero or almost zero. And that's where basically India, by creating a new switch, which is a central switch across all bank accounts, across all mobile phones. It has created a centralized switch. Now, they have also announced, the Reserve Bank of India as the sort of the regulator for the banks and payment systems. They've announced that now they will allow competition to come into providing that switch, the middle switch, which is called UPI, which is run by NPCI, a company called NPCI. It's not for profit, but now they are allowing for-profit guys to also come and make similar, so that in case that thing gets hacked or it doesn't work or it doesn't create more innovations, the newer guys will be able to compete with that and create new innovations and stuff like that. So today, the lowest, the farmers are getting 2,000 rupees every 2 months extra. The poor students are getting the scholarships in their house, in their mother's account, not father's account, because fathers drink up, okay? And so on and so. It's an unbelievable system, which has not been even bothered about. It would have been bothered about if the money would not have reached people. Then we would have got riots. Why do you think in 70 days, we closed down India fully? China did only for Wuhan, but India did the entire country, and then extra 80, 90 days already going on. Why there have been no food riots? It's so poor. People have to earn every day. Why there has not been no food riots? Because most places, I won't say everywhere, but most places, the remotest part of India, the grains have reached the poor. The money has reached the poor. And that's where there are no food riots. In a place which is 17% of world population, which is exceedingly poor, you can't imagine the poverty. Still, nothing wrong happened is because we used the technology so very well that it has not made news at all. None of you are even aware this has happened. And you guys are somewhere of Indian origin, right? And you guys have no idea of what has happened in last 5-6 years. India has, because it is also not bridges, it is not beautiful buildings, it's not great roads which are visible. This is basically ether, right? It's not visible, but it's doing unbelievable work.
Yeah, excellent. So final question I'd like to pose to both of you. Ashish, perhaps we stick with you to begin, which is we're seeing, a lot of technologists in this meeting, people who are technology experts their entire careers. How, 1 to 3 pieces of advice on how to transition into fintech or financial services? What skills do you think a technologist would need to hone or to gain in order to be successful in a transition to finance?
I mean, I have taken India from floor-based trading, physical trading, to the screen-based trading in '94, and then I have done mobile. I was part of the mobile revolution. I was now, of course, mobile trading and stuff like that, and of course, the payment systems. For me, initial takeoff is very rough, and it takes time for system to smoothen out from manual to automation. But when it takes off, it is unbelievable. I mean, the scale you can reach is mind-boggling. In 1992, India used to trade 2 billion rupees a day of stock market transactions, 200 crores in my language. Today, on a good day, we would do transactions of 40 lakh crore, okay, 20,000 times more in 25 years. That is the scale you reach if you, when inflection points arrive, right? And so, and the way I look at it is automation from manual is easy to do. But when you have to change from automation 1 to automation 2, it is extremely difficult. Nobody touches it. All US banks became automated on mainframe. In 1970s technology, in 2020, they are still on mainframe. Not possible to change, because if CIO changes, things go right, nobody's going to give his salary higher. But if it goes wrong, CEO, CIO, everyone will go, including COVID, right? And so nobody wants to touch what is not broken. And somehow they'll keep on continuing. That's why India actually leapfrogged. India didn't go for the mainframe-based banking. India went straight to the client server, and now they are on client server. They have not been able to go to the web native, because again, if you try to change, you will, most of the time you have problems, and then things go wrong, right? So that's where the manual to automation is easy, but you need to have patience. You need to have ability to evolve fast and take all the sort of things into consideration. But automation 1 to automation 2, only if you have courage and if you have no choice, you should do that. I did that for BSc, but it is like 1 in a million kind of situations where large corporates change their IT from scratch, and that is pretty much the take home on automation for me.
And Vinay, you've made this transition successfully into financial services, into being an investor, an entrepreneur, from starting with a technology foundation. What did it take to do that successfully?
So I think I would just highlight the key thing is, we've spoken about fintech, but the reality is most of the fintech that we see and that we've spoken about today is mostly tech. There is not much fin in it. So to be really successful and successful in a differentiated way, I think if you can introduce the fin in whatever the tech is, I think you have a huge edge. So that would be, I think, one key aspect that we increasingly see differentiation on. And that also allows you to take intelligence away from the privileged institutional arena to democratizing that financial intelligence across everyone. So it's not just about faster and cheaper anymore. It's faster, cheaper for better outcomes that you can get to people. So as technologists, I think if we start thinking about the end user, what are they trying to solve? How can we represent the clients better, the end users better, by introducing some financial know-how? I think then we're talking about a very open playfield. At the end of the day, the user has really 4 pillars around it. How do I make money, income? How do I borrow if I don't have it? How do I protect what I have, insurance? How do I save for old age, wealth, retirement? It's really these four buckets that dictates more or less the sum total of my financial anxiety, worries, concerns. And I think there's lots more we can do in all these arenas for all the users. If I think the folks working on the technology would think a bit more about the finance.
Great point. And we could certainly keep going on this topic for a lot longer. I want to thank those of you who have asked your questions in the Q&A tab, and hopefully we answered some of those. And I'd like to add my thanks to Ashish and Vinay. And with that, Ron, let me turn it back to you.
Thank you. Thank you, Devin. You did a superb job in this engaging discussion between Ashish and Vinay. I have one small question, one brief question before I go to the next topic. We are so proud of you, Vinay and Ashish, that you're both IITians, and that make us all IITians feel very, very proud. And you've done extremely well, and there are other IITians who've done extremely well in the financial services area. Do you suppose IITs themselves perhaps need to introduce more of financial education, training in their curriculums? And you can give a very brief answer each. I can start with Vinay.
Absolutely, yes. You know, I think I was fortunate to go get my PhD in finance right after my undergrad. And that combination has really helped in placing what's going on in context. You know, I think that without that, it would have been very difficult to understand some of the shifts that are going on. So I think it would be very helpful to introduce some part of that.
Thank you. Ashish?
Thank you. I think I agree with Vinay. I did MBA in finance from IIM Calcutta immediately after the IIT. I didn't even go for a one-day work. And that was really an eye-opener. And of course, in MBA, they don't teach you anything. They give you a flavor, and then you have to figure out yourself. But at least you get to know that. And fortunately, now the IITs are adding up humanities courses. In fact, our days also, I had taken one economics course and one philosophy course. Both were very useful, even when I look at it in retrospect, they were both useful in my entire life. But now IIT Bombay, the School of Management. I am also on their academic advisory council. And so I think today IITs are becoming a little more flexible than what they were even say 10 years back. And I'm sure all IITs slowly will add a lot of this, not only finance, but organizational behavior, sales, marketing, because finance is not only finance, right? It is all aspect of life. And so how to become an entrepreneur is not about finance, right? How to sell your products, how to create, how to actually sell when it is not ready, and take money out even when the guy doesn't want to give. So those are skills which are not taught to any engineers. That's why we remain engineers for our lives. And if you can learn that part, you know, that would be amazing. I think that'll give us a tremendous edge, all the newcomers who come in.
Thank you. Thank you, Ashish, and thank you, Vinay. At this time, I'd like to introduce Viri Bindra. Viri is an IIT Delhi graduate and a former president of the Pan IIT organization. And he would like to present a memento as a small token of our appreciation. Viri?
Yeah, thank you, Ron. Thank you. And it was indeed an absolute pleasure listening to the panelist. And now on behalf of Pan IIT USA, I'm honored to present the memento as a token of our appreciation to our distinguished speaker, Vinay Nair.
Thank you, buddy. Thanks.
So when I will email this in a PDF format in this crazy times, I can't send it to you. I can't give it to you personally, but I will send it as a PDF format to you.
I will print it and frame it.
Thank you very much. And next, I'm privileged to present this memento, the token of our appreciation to distinguished speaker again, Ashish Chauhan, all the way from India. Ashish.
Thank you.
So same, Ashish, I'll be sending you a PDF format in a day or two.
Yep.
And hopefully you will also frame it and keep it.
I will for sure.
Thank you. And finally, I'm delighted to present this memento to our young moderator, Devin Banerjee. Devin, you did a great job, buddy.
Thank you very much. I appreciate it. It was a fantastic conversation.
Yeah, I know that was fantastic. Thank you very much. And I'm very happy that you'll be delighted that you are not from IIT, but you'll get an IIT alumni certificate from us. So, right?
Excellent.
It should go on the wall. So once again, thank you guys. Thank you very much. And Ron, back to you.
Thank you. Thank you, Vinay. In closing, I would like to make a few announcements. First of all, save the dates. I'm requesting all of you to please save the date December 4th to 5th. Penn IIT is doing a major two-day global summit on various topics, and it's going to be attended hugely. We expect close to 50,000 people. So please register as soon as possible. Simply go to our website, www.iit.org. Additionally, our partners, Wheels Global, has a webinar coming up in just 2 days on September 12th, and they're featuring the famed Indian Shashi Tharoor. Please go to wheelsglobal.org to register. I would also like to thank again our gold sponsor, Celtis, our silver sponsors, Allen AI and Vanguard. I urge participants and their companies to please go to our website, www.iit.org, to sponsor our events, or contact me or Sunday. We truly would like to have sponsors that emulate our objective. Finally, a big, big thank you. Vinay, I mean, you just hit it out of the park. You are phenomenal. Thank you, Vinay, coming in all the way from Colorado. Ashish Chauhan, we really love those Mumbai Indians, but your discussion was phenomenal. And thank you very much. And we would love to see you back in December during our events on 4th and 5th. And finally, our young Devin Banerjee. Your dad and I are really proud of the IIT system, and particularly Nehru Hall. You know, all three of you were excellent, and Penn IIT USA is grateful to you. You saw some of us on the screen, but there are other volunteers in the back who've been doing phenomenal amount of work. Please see our next slide to appreciate the work by the volunteers. These include Ronak Mehta, IIT Gandhinagar, Arun Jain, IIT Guwahati, Sanjeev Goyal, IIT Delhi, Animesh Pathak, IIT BHU, and our Administrative Director, Swati Deshpande. Finally, thank you. Thank you all of the participants. You were wonderful. Thank you. And hopefully we'll see many of you on September 12th for the Wheels, and definitely on 4th and 5th in December for our major global conference. Thank you all, and have a good day or good night.